Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker, here with the numbers through the November numbers, which covered through the end of October, to kind of go over all the stats, the real estate numbers that you'll want to know whether you're a homeowner or looking to buy in a house. And if you're looking for the best place to go for real estate and up-to-date information on buying, selling, and getting mortgage financing, this is the spot. So if you like the video, please like it on YouTube. That helps people find it. All right, so for the end of October, I keep sounding like a broken record, but the star of the show is inventory. Man, is it still ridiculously low? I've got the numbers here, and I want to kind of make people understand when I say low inventory, just how low that is. So you got to think how many people are buying and selling real estate in any market, especially one like Central Florida, which is a pretty big area and a pretty big market. So in October of last year, we had 7,837 homes on the market. On October 2020, we have 5,840. And of that 5,840, so in October of 2019, this is the more interesting number to me, there were 6,000 single family homes on the market. In October of 2020, there's 3,800. That's almost half, not quite, but that is just unbelievably low. I mean, if you're buying a home and you already know this, there's just not a lot of options. New listings, there's 4,000 listings that came on the market, but almost 5,000 of them, 4,977, went under contract. So it just means that houses that are in the right areas, that are priced right, they're just flying off out of the market. I mean, people know that, often you're getting 4, 5, 6, 10 offers on a house that's priced right in an area because there's just not that many choices. So some other interesting numbers. Sales closed. 3,600 sales were in October of 2019. There were 2,900 sales. So again, back to that same inventory story. Inventory is going down, but the sales are going up, which if you think about it is kind of crazy because even though the inventory is lower, the sales percentage is up, which just means again that everything is going. And so rates stay low. Rates are down. The average market says 2.75%. I get this question a lot where they're like, "Hey, I refinanced my house, or I was working with my bank, and I didn't get these rates that are on these numbers." You got to remember these are average rates across the nation. Banks are charging points and discount fees and all kind of ways to manipulate those numbers. So remember, take that with a grain of salt. But in general, it means rates. I mean, I've been doing this almost 18 years. I've never seen rates this low. So regardless of your credit, your situation, your down payment, for that particular scenario, whatever that rate is for you, you are getting the lowest rate for that scenario of all time, period. And that is really also the big driver of the market. You have low inventory, right? You've got and low rates, and you have a lot of people buying. Probably the big story being in this market for me personally is this: if you think about the capacity. So if you look flash forward, back last year, if this is the capacity of the entire mortgage industry, well, you look at this year, really the mortgage capacity industry, the capacity hasn't really changed. You don't grow underwriters, processors, and loan professionals overnight. So it really does create some havoc in the market where deals are taking much longer to close. Real estate agents and buyers and sellers are used to closing in 30 days, and often most of those dates are not being made. And that's because if you look at the capacity, it's probably 50 times the amount of capacity that was just here last year when you put in refinances, move up buyers, and all those kinds of things. So one thing I'm always interested in is, what about next year? So there could be a bright spot coming up for January and February if you're looking to buy, maybe beginning of March. And that is sales typically fall in January, February, and March. I was looking at last year, we're averaging about 3,000 sales a month. And then in January, it went down to 2,200. And that's because obviously after the holidays, people try to get in before the end of the year. It can be a real sweet spot to kind of go out and buy a house, where you're looking during the holidays, which a lot of people aren't, and you can maybe find some less competition. But for people that are waiting for that housing prices to drop, when I look at a couple key things, which is affordability. So right now the average a home in, the average median income in Central Florida, let's call Orange County, is about 58,000, and Seminole County is about 67,000. You can Google that for your own county, but that's about right. The median income is about 60 grand. So if you take the median price for most of these areas, which is about 270,000, the average payment on a $270,000 house, if you're putting about 5% down, it's going to be $1,600 to $1,700 a month. If you take principal, interest, taxes, insurance, PMI, all that stuff, which is about 35% of your income, which lenders, want you to be around 36 to 38% on average of your gross income to be used towards a house, which means that by that standard, housing is not really overpriced. Now, housing has went up in value, but still median income drifts up over time, though not as fast as the housing market. But again, here in Central Florida, that is in line. And remember, people want to live here. I did it on my last video. Millennials are moving here. Florida is very pro-business, so you've got a lot of businesses moving here away from the states that have a lot higher state income taxes. So Florida is really a growing state, and I do not expect next year to slow down at all. If you look at new starts from builders, you look at all the potential inventory of next year, and with rates staying low, which I believe will happen, I really expect more of the same next year. So January and February could be a time to sneak in the market. It's traditionally a slow time across the nation, but also here in Central Florida. But I believe as March, April, May, we get back into the swing of things, it's going to be the same thing. So again, I think rates will drift up maybe a little bit over the year. It's a lot's going to depend on the economy and a few different factors. And there are some headwinds that I've done other videos with the evictions and forbearances and all those things to play out. But again, when I look at here in Florida, especially Central Florida, with the builder starts and all those things, there's just not enough inventory to keep up with the demand. And you've got more demand of people coming in from out of state, which some states don't have. So what does that mean to you? It means, one, if you're looking to buy a home, get pre-approved now, find someone you trust. I do simple, easy to understand mortgage advice, free pre-approvals, no lender fees to make sure you know exactly where you're at. And don't wait. Sneak in there January and February, maybe a slow time of the year, get a house. But remember, people that waited, 2 years ago that didn't buy now are wishing that they would have. So again, hopefully that helps. Let me know if you have any questions. Those are the numbers through the end of October. We're here all the time to answer any mortgage questions or mortgage needs that you have. Hope you're having your own personal recovery. And as always, let me know what we can do to help. Thanks, and I'll talk to you soon.